The basic accounting equation is a fundamental concept that describes the relationship between assets, liabilities, and capital. The main formula is assets equals liabilities plus capital. From this formula, we can get another equation. Liabilities equals assets, capital equals assets, liabilities. These three components interact to reflect the financial condition of an entity. Any change in one component will affect the others, so balance must be maintained. For example, if assets increase, it could be due to an increase in capital or liabilities, indicating a funding source. Understanding this equation is important so that financial reports can reflect accurate and balanced conditions. Assets are resources owned by the company. Liabilities are financial obligations that must be fulfilled. Capital is the net wealth that is the right of the company owner. Example of basic accounting equation questions. Gus is an entrepreneur who wants to start a company that sells musical instruments. After saving money for a year, Gus decided to officially start his business. He formed Guitars Incorporated and invested IDR 100 million in his new company. This business transaction increases the company's cash and increases equity by the same amount. Assets or cash equals 100, 000, liability equals 0, equity equals 1, 000. After the company's formation, Guitars Incorporated need to buy some guitar inventory, which will then be resold for a total of IDR 80 million. In this case, Guitars Incorporated uses cash to purchase assets in the form of inventory, so the cash account decreases and the inventory account increases. Cash equals 20, 000, liabilities equals 80, 000, equity equals 100, 000. After 6 months, Guitars Incorporated is growing rapidly and needs to look for a new business location. Gus decided that it made the most sense for Guitars Incorporated to buy a building. Because Guitars Incorporated does not have IDR 500 million in cash to pay for the building, the company must take out a loan. Guitars Incorporated bought a building for Rp 500 million by paying Rp 10 million in cash and borrowing from the bank the remaining Rp 490 million. This business transaction reduces cash by IDR 10